Okay, welcome to the grinder. What is a grinder? What is the grinder? The grinder is a name I use for somebody who is turning from somebody who knows the technicals, somebody who can chart, somebody who's learning how to do this, into a professional day trader. Professional day traders kind of have to go through this grinding process. That's why I call it the grinder, in order to become professionals making money. So the grinder is somebody, like I said, who is transitioning from learning how to do technicals and transitioning from understanding what to do on the charts into making money every day. So it's kind of that pathway or that segment between putting it on the charts, drawing your lines, validating your TA, seeing if you're correct, seeing if you're incorrect, analyzing your knowledge, into actually turning it into an income every single day. So what is the grinder? Again, the grinder is going to start by defining some terminology here and looking at a few different scenarios as to what a grinder looks like. The first thing is bankroll management. You guys have taken bankroll management now. You know what it looks like to properly manage a bankroll. So we're going to start there. Properly managing a bankroll is a huge piece. So as part of a person who is constantly grinding, or the grinder, as we call it, that segue into turning your first $1,000 into 10,000, or maybe if you're working with 10,000 into 100,000, or so forth and so forth. When maybe it's $100, maybe it's $100,000 into $5 million. I don't know, whatever it is, it doesn't matter. That's up to you. So let's talk about how we get there on that path. Okay, bankroll management. We know that we need to be splitting our active account and our main account, right? So our active account, let's just go over a few things quickly here. Our active account is going to be what we trade with every single day. So active account, right? This is what we're trading with. And M is main account. Your main account, just as a recap, should have 95% of your bankroll in it, right? It should have most of your bankroll, and your active account should simply have 5% of your account. And if you lose 5% in your active trading account, you can simply just draw another 5% from this category over here into your active account, leaving you with 90% and so forth. So this is all part of being a grinder. It's all part of the process. It's all part of shifting from somebody who's trying to do this for a living into somebody who is doing this for a living. So what is the grinder? Like, what do we do as grinders? Well, what we do is we find advantages in the markets, right? So what we are doing is we're constantly finding areas where we can take smart trades, right? Okay, so let's look at a few different examples. You would see simple level like this right here. Leg of a move in the future becomes a support for a big move. Great spot to buy, right? So we're just going to do some kind of a bonehead TA right now, just some very simple things, and maybe go into some other time frames here. Let's see, what do we want to look for? Let's go into a 4-hour time frame. Find where we would have a breakout level, which would be right here. And delete the first one we had. So some pretty, obvious opportunities to short, to long, to take profit trades at. You'd have your hold level right there. You'd have another hold level back here. Some important hold levels that we are looking at. So they become kind of targets that are very easy to see. They become trades that are very quantifiable, here's the target, here's the trade. Let's look at taking advantage of these very simple things. So grinder is somebody who is going to not only take these extremely easy trades, right? These are, I would consider these fairly easy trades. There's a scale of easy trades all the way to hard trades. I would consider something like buying these bounces here kind of easy targets, easy trades to take, right? Buying this as a target and going forth down the line, right? You have a hold level here that's pretty important. And these are a little advanced, these hold levels, and why I'm picking them, but that's okay. Not to worry. Right, so you have some pretty easy targets, right? So this is not really what the grinder is. This should be part of the grinder's repertoire, but this is not really the grinder, right? This is not really grinding every day. This is not something this is something we can add to our repertoire, right? But this isn't what a grinder does, okay? So what a grinder does is something like this. Okay, let's delete what we have on the charts here. We went over a few simple examples. Let's just delete that stuff. Let's delete this stuff. Let's just kind of look at where we currently are in the market right now. Okay, so I'm going to take a wild guess as to we are right here and saying that we are at this origin right here and we are trying to break over it right now. So our next target is going to be something right there, 10,400. Yeah, that's the next origin level. Okay, yep, that's it right there. Perfect touch. This is kind of, the first part of being a grinder is to kind of understand the overall concept of the market, like the overall tone, what's happening, what's your bigger targets, what's happening on a broader scale, right? Let's simply go like this. Hard close this to here, right? Like that, which would hard close to here, right? So if we actually took this replayer tool and even came back to a scenario like this. So let's actually go into the past a little bit, take a look at this. A grinder is somebody who is going to be taking trades all day long, every day. So let's put a definition on that term, the grinder. The grinder is somebody who's taking anywhere from, I want to say, a minimum of 5 trades a day, all the way up to 30, 40, 50, 60 trades a day. So the grinder is somebody who is sitting there building their bank account day by day by day by day, right? There's somebody who is sitting there and avidly working, avidly putting their craft to practice, and every single day taking trade after trade after trade after trade after trade. So we would look at this and we would say, okay, let's mark the relevant levels, right? So we have this right here. That right there is a short target. So if we were in this trade, we would simply open this with a short, right? Now we're going to assume that we're leverage trading. We're just, playing Bitcoin right now on the replayer tool. This would be a great short opportunity, right? So we're actually going to break this down to 15-minute charts. So, you look at this thing and you'd say, okay, well, respectively, if it can hold this part of the move right here at first, it might actually, it might actually take a move up, right? And then furthermore, if it can hold this part of the move right here, which looks like it's protected by this right here, it can still take a move up, right? So it's just kind of continuing its hold. It's continuing its push up. So this would be like ample opportunity, perfect spot to short. So let's start opening this there, right? So we've kind of defined our larger targets. Now we're looking at, okay, how do we actually make 5, 6, 7, 8, 9, 10 trades a day, 20 trades a day, 30 days a trade, 30 trades a day? You do this with a volume of hours, right? So you're going to be trading a lot. You're going to be practicing a lot. You're going to be in front of your charts. You're going to be 10 hours a day, 12 hours a day, 13, 14 hours a day. But therefore, it's going to lead to you making an absorbent amount of money. So this is a good thing. This is a good problem to have, right? So assumingly, we would look at this and we would say, okay, here's our first trade on the day. We're going to pretend it's 9 a.m. We just picked a random spot and we're saying, okay, this is going to be the perfect short target if it continues to hold this level right here. So we're going to use kind of where do we get out of the trade? And I'll kind of maybe make those. Yeah, you know what? We're going to do a purple color. Let's do purple. Yeah, purple looks good for this demonstration. If it continues to hold this target, we're simply going to get out of this trade. So we would open a short here. We've defined kind of our perfect level to short this at. Going back to what level that is. That is an inverse level back here. It's way back here, but it's an inverse level. I believe it was on the 4-hour chart. It was a pretty important inverse level from what it looked like. So you're going to sit here and say, okay, this is kind of the perfect target to short. Okay, so when would you short it? Okay, this is something that you would say, you wouldn't necessarily want to short this on the first touch because this could actually just touch it once and blow right through and just continue to go, right? So you actually want to give this a little bit of time to see what it's doing, what it can hold. It already has kind of tested this hold. So if it comes back and tests this again, it's most likely gonna break the move unless it holds to the breaking of a trend, right? So, and there it is. That's kind of the hold we're looking for, right? And then so you want to say, okay, can it break this trend? If it can, then it's probably going to continue to move up, right? So it goes to trend there, fails there, touches again. And this is a point where it's looking like it might take another run up if it breaks the trend. If not, then you would simply stay in this trade. So we've kind of opened a short back here, right? You've got, so let's take the magnet tool off for this because we're going to need to measure this properly. You've got 60 points here already. So let's say if you were the quote unquote grinder and you're looking for these opportunities and spots all day long where you can make 50 points here, 20 points there, 30 points here, where would be the next spot that you could get in, right? You could wait to see how it reacts off this level. And we are going to color this the same color. Going to say it's going to play this level instead. This one right here, right? So I'm kind of picking the levels that I think are the most relevant, that would be good long opportunities, and saying, yeah, this looks like a great level. So I'm going to say this right here will be the spot 3 by. Our magnet tool's off, so that's fine. We're just going to kind of leave that floating there. Might be a little off when we click through our replayer, but that's okay. I'm going to look for the best spots to say, okay, where's the opportunities here? So the grinder is like, you've made your 60 points here. That's great, 60% on a trade if you're doing big leverage. I would implore you guys to take these bigger shorts, because when you're trading the science, it becomes very, very specific and very acute, right? So this is a spot where you would look at this and you'd say, okay, I've made 60 points. Possibly I could stop out. You have to account for your profit loss due to trading fees and these things like that. So you have to, whatever your trading fees are, for most people, I think it's 7% is the default. And then it scales down to 6%, 6.5%, 5%. The more you trade, right? So the more you trade, the more volume you do, it's going to scale down. So you can already see it's losing the level. So this is a point where you wouldn't be getting out of this trade. And now we have a new accumulation candle to pin this to. So we're going to go like that. I would not be getting out of this trade. I would let this short ride out. It doesn't look like it's going to break up to me. And I would just continue to let this bleed out. And it does right there. It tries to have a little breakout and it fails down completely. And so it actually touched our first target that we were talking about right here. So had you stopped out of the trade here, oh, it actually didn't reach that target. Well, anyways, that's fine. We can simply just say, like, here's our target for the short. The measure tool here, my shift key is not working. You're already at 145 points. So you've already made 145% on the day. And you've done this relatively quickly. It's maybe 2 hours of trading you're doing in here, and it's one trade and it's 145%. So this is kind of counterintuitive to the grinder, because I think we picked a spot where you're going to see maybe a larger dump just because this is an inverse level. So you're going to see a bit of a pullback here. Oh, wow. What a pullback that was. So it lost that level and it instantly pulled back. So had you been in this short and not closed it and just stop trailed out, you would be up 700%. So that's actually quite crazy. You would have had an insane trade there to take. And it becomes very obvious, right? It becomes very obvious when you start to hit this inverse and then fall back against your level and you just collapse straight through. And this would be a very good day, right? Okay, so you're looking at this trade now and you're sitting there and you're like, oh, maybe you only took 200%. Maybe you got out here or something because you thought that the long target was here. Now you're never taking a short to instantly enter a long. Like you wouldn't instantly enter a long here unless you're not in a trade and you're trying to knife catch something. So I want to go back and kind of see some relevant levels here and say, where does this trade make sense? This is a pretty big move down. So I'd be looking at maybe some larger charts here. And I would assume it's something inside of this candle. Like there's a valley here that starts, right? You're going to go and drill into this thing. You're going to look for kind of origin level. So like this one right here is probably where people are relonging. So then you're going to be in this and you're going to be waiting for your next opportunity, right? So the grinder is somebody who sees this, instantly takes that trade. Like as soon as it bounces, takes that trade, gets out within minutes and makes, 100, 200%, right? So you can play both sides of shorts and longs like this, right? So if you're picking the right levels, if you're identifying the right targets, that's exactly what you're going to be doing, right? So let's let this play out for a bit. You're not going to, I can't see a big move up over the net. You're going to come back and touch this target. I can't see a big move up happening immediately off of that kind of distribution, that quick of distribution anyways, that's pretty fast. So you're going to wait for more of a stabilization period. When you're looking at this, that's fine. Replayer tool can go right there. That doesn't matter. Replayer tool. So when you're looking at this, you're looking at more of a stabilization period to take a smart trade, right? Like you're looking at this and you're saying, okay, this trend is completely broken. You've got this here like this, and this tried to break this trade and it simply just inversed off the level and completely collapsed down. So we're actually going to remark this trend here for the future, right? Because we're kind of building out our chart here a little bit. And then you got this here against you're going to have something like this one right here. tried to break up, completely rejected trend, failed down. And even in a local sense, you're going to have something like this to this, where you need to even break this local trend too, right? So you're going to have to kind of stabilize. So the grinder is looking at this. The grinder is looking at what trades can you take to take advantage of all these situations? Where can you take 4 and 5 and 6 and 7 trades? So let's kind of break this down here, right? You have a trade here, and if you were lucky enough to knife catch that, you made a 200% trade, because you're going to pretty much be selling this rate at 100 or 150 points, right? Like this is a big move. There's kind of a rule of thumb that I like to use, that if a trade pulls back, say 7%, or let's use an easier number, a 20% ratio is kind of like the bounce rule that I like to use. Now, this is not a hard set rule. This is something that I've used over time. I kind of adjust that range as I'm trading. I'm adjusting that range a little bit as I'm trading. If the move looks like it's going to break a larger trend, I might be adjusting it to be wider, right? But if you move down 5%, you use a 20% range. So if you can knife catch something at the bottom and you move down 5%, kind of want to take a 100% profit, right? Or a 1% gain. So if you move down 500 points, you kind of want to take a 100-point knife catch and just get out and rebuy the hold. So what that looks like is this. And this is all a part of being a grinder, right? So you come down to this level here. This is kind of like an origin hold level. You come up and you make 100 or 150 points. So let's see how much this pulled back first off. So this pulled back from here to here. So let's get a calculator real quickly. I'm going to do this. So what do you have? 7.17 times 0.2. So you're going to want to take roughly 143 points here. So you'd take roughly 143 points off this level. So 20%, 143 points is right there. That's 144. And that's pretty close to what you can get filled on this trade. There might be a little more top to bottom. I think there's probably about 2%, but this is a good rule of thumb when you're doing knife catching. So this is kind of like first one of the definitions that I like to use when I'm knife catching. Like there's a full 2% there, but capturing 75% of that is incredible, right? It's quick money. You're talking about almost tripling up your active account. Say if you had $500, we're going to stick with that $500 number. I think it's a nice round number to use. And you did a leverage trade. You knife caught this, and you said, okay, I'm gonna take this 20% rule, take 140 points after you lose your 7 points for your trading fees. Let's just call it 125, because maybe you got a little spooked, or you market sold or something. Maybe you misclicked or something. We'll just call it 125% in minutes, right? So this is like kind of fits right in. This kind of fits right into the pocket of what does a grinder look like. Think of a grinder as somebody who has pocket aces and just doesn't do anything. Just sits there and looks for every single hand to play, watches every single hand like a hawk, and just likes to jump and pounce on the best situations. That's kind of like the grinder, right? Take this. It's a 5-minute trade, 10-minute trade. You knife catch the right level, and instantly you make 145%. Like it's great, right? This is catching a knife. This is grinding. I think the problem that a lot of people get is they don't start by defining important levels. Like we defined a pretty important level down here. You'll notice that these levels that we're defining in here to hold this move up, there's a big staggering difference, okay? This is trying to hold the move up immediately in this cycle here, right? So you've got, I don't know, maybe a 4-hour push against against an inverse level that was created. What is the date on this? November to January. So you've got an inverse level that was created 2 months and 10 days ago, or whatever it is, 2 months and 10 days ago versus a 4-hour push that you've been currently. So you can kind of see the misalignment of why this pulls back so hard, because there's an inverse level that exists for a full, 70 days. So a 70-day inverse versus a 4-hour push up. Like when we hit this inverse over and over and over like this, and you see the pullback come down, you hit this inverse once, twice, 3 times, like you hit it, you'd blast right over this if you were going to actually close it, right? So you attempt to close it, you even fail that, you pull back, you hit the leg of the move, like all the writing's on the wall, right? So this is like the perfect kind of opportunity to look at like taking a really good short here. So I don't know, maybe you only took 100 points on this side and you got out and you waited for this side, you took 100 points here or 125 points or whatever. This is kind of like the exact what a grinder is. We're not swing trading. We're not position trading. We're not looking to take the most optimal position across all the charts. We are looking to see how much money we can make that day, right? It's the grind. It's wake up every day, look for the pocket aces or whatever, look for the best case scenarios and play those scenarios every single day.